As always, it's time for the MF Corner on the show. Now, the infrastructure sector was expected to drive the India growth story. Now, not only has the sector failed to take off, infra funds have actually hurt investors. Let's chat with our expert, Dhirendra Kumar of Value Research, who joins us on the show to tell us if investors should hold on to their investments in these infra funds. Dhirendra, why is it that infrastructure funds have failed so badly?
Simply because, they're the grossly overowned sector or the kind of stocks in 2008. I don't think they ever made a comeback. Political uncertainty and, the market decline, they have only pushed them away from out of investors' radar. So, it's time to, though I've been telling it for a while now, because infrastructure doesn't give you any specific advantage, huge investors' appetite, but it has not translated into any investment performance. So it has been overall, greatly the most disappointing story as a theme over the past 4 years.
Right. And Dhirendra, if we just chat specific funds, then Reliance Infra Fund, it was really launched with a bang, but it's the worst performing fund of the category. It's lost nearly 43% in the last year. What do you think is the reason for this performance, and what would you advise investors to do with their existing holdings in this fund then?
One is that, this fund was the last big infrastructure fund to be launched in the wave of 2008. And this fund has, consistently seen exodus, so fund managers haven't got the opportunity to really manage the fund beyond managing redemptions. Third is their, mid-cap focus. It has been extremely disappointing. The lingering, market turbulence has not allowed it to perform. I'm not saying that, they are questionable investment, but, I think it has been bad weather for this fund ever since it got started. And it has only been compounded by their portfolio focus and investor exodus. So it has been one of the biggest disappointment and the largest number of investors affected there. Time to call quits if you haven't so far.
Okay, let's talk about a fund where it's probably not time to call quits. The Canada Robeco Infra, it's the only 5-star fund in the category, and it stayed true to its rating with a very sound performance. So should one look at this fund? It's an impressive infrastructure fund, but I would still say that, infrastructure as a theme doesn't present anything meaningful for investors. But otherwise, this fund has really stayed, kept its focus, done well, and has organized itself in a manner to escape all the declines relatively, better. Not that it has not fallen. It has managed, navigated the declining period much better with its portfolio, maneuverability. So an impressive infrastructure fund, but I don't know. Overall, I would not urge investors to be into infrastructure fund.
But Dhirendra, just keeping with that theme then, HDFC Infrastructure, now that's a 4-star fund that was doing well if you look at the 3-year returns, but as far as the annual returns are really concerned, it is on the bottom. What do you think has changed for this fund and that's hurting the performance?
Oh, this fund actually got the message right that infrastructure is worth keeping away, and most infrastructure funds have a very loose mandate. They can be almost into anything except for IT and pharma and FMCG. This fund tried to, keep away from infrastructure and has 36% into financials. And I think, there it got hurt as much more or just as much. So, this fund trying to keep away from infrastructure because it cannot, that's the only mandate, the provision in the mandate where it can navigate. And it has been badly hurt there too. And there the portfolio focus, maybe over time it overcomes that. Here the fund manager certainly has a track record of, bouncing back much better. But this hasn't paid off when we take a stock today.